Good afternoon. If you're joining us from Southeast Asia, welcome everyone. I'm Joji Philip, the founder, editor, and chief at DealStreet Asia. I'd like to go through a few quick housekeeping notes before we begin proper. This session will be recorded. We'll be publishing the transcript and video next week. To all attendees, thank you for joining us. You're encouraged to submit your questions via Zoom's Q&A function. We'll curate all the questions and we'll try to have them answered in the last 5 to 10 minutes. Today, we kick off a series of webinars that will be spread out across the next 4 weeks. And we begin with one of the hottest trends that we have witnessed in 2021, Buy Now, Pay Later, BNPL. Two quick points before we begin. First, our next webinar after this is on the coming Monday, and you can see the details on the screen. Next, DealStreet Asia is also bringing back its Jakarta Summit. It will be a virtual event, and the dates are 8 and 9 of March next year. Don't miss out on the early bird offers. So back to fintech trends, especially buy now, pay later. And let me start with a few data points from the Google Temasek Bain report that was released yesterday. The report states that over the next 1 or 2 years, 65% of all digital merchants are likely to increase or continue their usage of consumer financing options such as BNPL. Searches for BNPL grew 16% in the region, particularly in Indonesia. The report also predicts mass adoption of digital payment options, including BNPL, even by offline merchants by 2020 or by 2030. The pandemic has accelerated digitalization across Southeast Asia. It has created a fintech boom, which is reflected in the funding numbers. Let me share some quick numbers that have been put together by DealStreet Asia's data team. In Southeast Asia, in the first 9 months of this year, fintech deals grew 54% year on year, and fintech deal value was up 260% in the first 9 months of this year to 4.62 billion compared to the same period last year. The share of fintech deal value relative to all equity investments in Southeast Asia grew to 34% in the first 9 months of 2021 compared to 18% in the same period last year. And 11 of the 23 unicorns that were created in Southeast Asia this year were from the fintech space. And with the pandemic forcing consumers to change their habits, fintech companies have also seized the opportunity to implement BNPL solutions, replacing traditional financing options. And some of the world's largest deals this year have involved BNPL. Like Stripe agreed to pay $29 billion to buy Australia's Afterpay. And recently, in September, PayPal announced plans to buy Japan's Paidy for about $2.7 billion. So what's the scene in Southeast Asia? And we have the 3 best placed panelists to discuss this. I'm joined by Dheeraj Chaudhary, Chief Business Officer, Southeast Asia for Pine Labs, which is among the largest fintech players in South Asia. Also, there's Chris Yoff, Managing Director, Head of GrabPay and GrabRewards from Grab Financial Group. Grab does not need an introduction. And the third panelist that we have today is Angus McIntosh. He's the founder of Cross ASEAN Research and is an insights provider on Smart Karma. To begin with, let me just ask the 3 panelists to take less than a minute to introduce themselves and their respective firms. Dheeraj, you want to go first?
Sure, Joji. So thanks first of all for having me on this panel. I think it's you're right. It's one of the most exciting topics that are it's hitting the fintech space, BNPL. So as an introduction, I've been actually a consumer banker all my life. I've worked with banks like Standard Chartered, ABN AMRO, RBS, American Express, and then finally jumped into the fintech space, managing. I was the CEO for Funding Societies, which is a P2P lending company, and from there I moved to Pine Labs. Now, Pine Labs is one of the largest merchant solutions companies in India, providing BNPL as one of the offerings besides all the others. And we are spread across India, Southeast Asia, Middle East, and really providing these solutions to merchants to make their operations efficient.
Sure. Thanks. Chris, you want to go next?
Sure, and it's good to chat with you again, Joji, and thanks DealStreet Asia for having us. My name is Chris. I've been Grab for over 5 years. What I do is I'm the managing director and head of GrabPay and GrabRewards across the region. So very happy to be here. Thank you.
Agnes?
Thanks very much for having me on, Joji. My name's Angus McIntosh. As you mentioned, I'm the founder of Cross ASEAN Research, which is a research firm looking at Southeast Asia, predominantly Indonesia, Thailand, and the Philippines, and obviously Singapore as a kind of regional hub. I cover both the offline as well as the online economies, if you like. So I look at, banks, consumer companies who are listed in Southeast Asian markets, but I also look at digital economy stocks, a lot of which are private. So I spend a lot of my time sort of looking for interesting information. Probably, Joji, doing a lot of the stuff which you all do at DealStreet Asia. But so it's very interesting times. Southeast Asia is a huge market, 650 million consumers. It's increasingly driven, by the digital economy and by adoption of smartphones and smartphone penetration. So it's some very exciting areas of growth. And I think today's subject is especially salient. But that's probably enough from me.
Yeah. Thanks, Angus. Let me actually start with you to kick off the discussion and look at some big picture questions first. You just explained how interesting Southeast Asia was. And when you look at and you've been covering the digital economy in this region for over a decade. And if you look at the broad fintech scene in this region, is BNPL the next big thing as it is made out to be? What's your data telling us?
Right. Well, let's just start with a slightly sort of bigger picture view. In that, obviously, when I first started looking at a lot of these digital economy stocks, and that would range from companies like Gojek and Tokopedia and so on, and latterly Grab. Early on, they were very small. When I first went to meet with Tokopedia, I think they'd only raised about $100 million or $136 million. So, and that was 5 years ago. So, things have really changed incredibly rapidly. And I think, the recent pandemic and ongoing pandemic, hopefully coming to an end soon, I think that's accelerated the adoption within the digital economy in various different areas. That includes obviously, e-commerce, ride hailing, food delivery, online groceries, and more especially, a lot of digital economy companies are looking to get involved in the financial side of things, right? So digital finance generally and fintech, hence the huge flow of funds looking to get exposure in that space. I think more recently, buy now pay later has, and I think this has happened more quickly again because of the surge on transactions online, has become a very, very attractive area for finance companies of different types. More especially some people like the companies like the P2P lenders like Akulaku and Credivo are moving into buy now pay later as their growth area. But you're also seeing some of the banks also getting involved. So BNI, for example, in Indonesia has already teamed up with Traveloka and Shopee to offer buy now pay later. And the other thing is it's an alternative to credit cards and much easier for consumers to be able to get a buy now pay later deal rather than actually get a credit card, which is not very easy in places like Indonesia. So there are lots of different aspects to it, which I'm sure we'll touch on throughout the webinar. But yes, and I think it is a very important and very interesting growth area and kind of democratizing consumerism in a way. There are lots of key areas which have to be addressed, like credit risk, obviously, like funding, which we'll get on to later in the webinar, I'm sure.
Yeah, thanks. Chris, let me come to you. In terms of the opportunities that is present in Southeast Asia, as of 2019, it was estimated that about 73% of the population, 600 million plus people here, don't have a bank account and therefore don't have access to formal credit. Financial inclusion is low. So whether it is the unbanked population, cashless payments, consumer loans, how big is the opportunity in Southeast Asia if we were to use China as a benchmark?
Yeah, thanks, Georgie. I think you mentioned 73%. Indeed, I think the reason why GFG and GrabPay is so excited about Southeast Asia and we're so committed to this region is just because of this, what we think is massive headroom in terms of fintech and financial inclusion. And of course, I think, GFG, we are here really, our mission is really to improve financial inclusion and to create economic empowerment. So besides the underserved and unbanked, which you just talked about, the other interesting stat which Angus was pointing to, of course, is that actually Southeast Asia, 9 in 10 don't have credit cards, right? They've got a debit card, sure, some of them, but most actually don't have a credit card. And of course, Singapore's an outlier here, but most of the 680 million peoples of Southeast Asia that Angus was talking about, they don't have a credit card. And if you look at Southeast Asia today, I mean, you compare to China, China is a global benchmark. I think in terms of cashless transactions, about 43%, but in Southeast Asia, it's only about 17%. So there's massive headroom. But one key difference, I think, between China, the global benchmark, and Southeast Asia, which I think we'll talk about, is just China, homogeneous market, Southeast Asia, heterogeneous, highly diverse, fragmented market. So the importance of being hyper-local, right? And that's where some opportunities come in. And if we look at the key factors that are driving growth in Southeast Asia, we talk about the mega trends and macroeconomic, as Angus has talked about. The other thing, of course, the second point is about the tailwinds, right? So the structural changes and acceleration from COVID, e-commerce, as well as cashless payments and adoption. So that's a big tailwind. And the third thing, which is actually really important for Southeast Asia, is that in general, regulators are quite forward-looking. Sure, there are different shades in each country, but that's very important. And that's very important for all the fintech players, including GFG, to really work with them. And that's why we're so excited about this opportunity and really leveraging assets in Grab to really try to serve our customers and merchants much better in terms of really leveraging this opportunity. Of course, GrabPay started, 3-4 years ago, but just being a payment method embedded within the Grab ecosystem for transport and for food delivery. Our strategy moving forward is really how do we serve the off-platform merchants and customers much better. And indeed, today already 40% of our TPV is off-platform, and we just see that growing further and further. So that's where we see the potential, and that's where we think our journey is actually just starting.
Dheeraj, just adding on to what Chris said, when you look at the big picture, the fintech trends across Southeast Asia and India over the last 18 plus months, all the new things that have taken off, frictionless micropayments, auto debits, buy now, pay later, embedded lending, has all of this created a new cycle of consumption in this part of the world?
Yeah, so Joji, if I were to actually go back a little beyond the 18 months, actually the whole, and India is a great representation of the other countries and the evolution that happened in the other countries in terms of payments. So it all started in 2016 when UPI was launched in India. And after that, there was Bharat Bill and NTC. 2019 got a tokenization guideline. So the whole regulatory environment in India was kind of, contributing to as a tailwind, as Chris said, towards the payments space. With new innovative products coming in, smartphone penetration, e-commerce growth in India, all this caused India to grow at a digital economy growth of about 23% CAGR. Right? UPI, I was amazed when I saw the last numbers. UPI did $100 billion over the last 18 months, as in now in 1 month they did 100 billion, and in last 18 months they were 20 billion, right? So that's the extent of digital payment growth that's happening in a country like India. And India is no outlier in the sense all the countries are growing. Southeast Asia e-commerce growth is growing by 80%, right? CAGR. That's not a small number, right? So all this is obviously contributing to a new cycle of consumption, as you called it, right? And the big three trends that I see that are happening in these consumption cycle changes is that uni-channel businesses are moving to omni-channel. I mean, that's like a hygiene now, right? Everybody has to move from there. The other thing that's very prevalent happening is that earlier digital payments was the mantra, right? Now it's becoming contactless, invisible, instant payments. That's what's the second trend that I'm seeing in the cycles. And the third one is physicality is no longer important. It's cloud presence, right? You don't have to have a physical office, business, I want to say home, but you don't have to have anything physical as long as you have cloud presence. So all these three trends are really making a difference in terms of the consumption cycles that are happening in this part of the world.
Got it. Let me come back to you, Angus. So as an analyst, when you look at some of the global players in the BNPL space, like Afterpay or Affirm, and if you sort of compare it to the Southeast Asia players, what are the key differentiators, if any? And can we also look at the performance of some of these global giants which cater to a Western audience and draw direct comparisons and make projections here?
Yes, I mean, I think you can draw a number of parallels, and I think you have to take a step back and look at where Afterpay and these big players like Klarna and so on have come from, and their experience in the space, which, as far as I can see from the information available, they've done pretty well in terms of assessing the risk, because that's the key. You've got the funding, you go out and you find your consumers. It's done through the merchant. Obviously, you've got to assess what the risk profile of that consumer is. Now, the difference, I guess, in Western, more developed economies is that you have, probably a lot more information on individuals. They have a much broader digital footprint, so you can see what they've been up to. What their spending patterns are like. Whether they've borrowed too much money in the past and not paid it back. So all that kind of stuff is interesting to when you're going in a new business like this, to assess the risk associated with it. And I think interesting enough, in Indonesia, there is actually quite a strong kind of credit bureau. And if you're onboarding a new consumer in Indonesia as a buy now pay later player, you also have quite a lot of information on that person by their KTP, which is their identity card. You may have data from platform transactions. You will know where they live, and often buy now pay later limits and so on are set. They will vary depending on where someone lives. If they live in a very smart apartment block in central Jakarta, they may get a higher rating than if they lived in say Bekasi in the suburbs. So there's actually a lot of background information in Indonesia that you wouldn't think would be there in a less developed market. It's actually not too bad. So the prospects from that perspective are reasonably good. And I think market data so far has shown that NPLs for some of the big players, one of the banks, BNI, is involved in buy now pay later with Traveloka, and as I said with Shopee, and this is public information. But they've said that their rate of NPLs are less than 1%, which is actually pretty respectable, and that's kind of similar to a mortgage loan, if you want to put it like that. And remember, this is kind of unsecured lending on consumer goods. So yeah, I think that's probably what I say. So lessons have been learned from what's happened in more developed economies, where the take up has been huge. We're here in Southeast Asia at the very early stages of the development of this particular avenue, but it's growing very, very quickly. I mean, I think I mentioned 80% growth in e-commerce. I think that's kind of the growth we've seen or projected to see for this year for buy now pay later in Southeast Asia.
Got it. Angus, just sticking to Indonesia, a quick related question. Fintech lending, especially by startups, have sort of been existing in Indonesia's startup ecosystem for the last couple of years. Just that it was not called BNPL, but more in terms of installment lending. So what's different from the current BNPL gold rush that we are seeing?
I think the key to it is that a BNPL loan, not universally, but to a large extent, doesn't have any interest associated attached to it. So the consumer themselves doesn't see any charges. They're just paying over a period of time. It might be 1 month to 3 months or even 6 months, but generally between 1 and 3 months. The way the BNPL company makes money is through the merchant discount rate, which can be anything between probably 4 to 8%, depending on the type of product. Big ticket items may have a slightly higher discount rate attached. and it's a way of the merchant or the retailer generating more sales. And what's often happening, and this has been used quite a lot in Western markets, is that there might be a broader or higher merchant discount rate, but some of that can be assigned to marketing. So, you know, as these buy now, pay later apps develop, there will probably be quite a strong marketing component to them, and they will have other services attached. So, you know, if you go into your buy now, pay later app, whoever it may be, and then that will then direct you to various different retailers and merchants. So, you know, that you will be automatically directed. So you say, oh, I want to go and buy, you know, a new watch or a new piece of electronic equipment. You can be diverted to a particular merchant through the BNPL app. And you know, that is another charge the BNPL merchant can levy on the retailer. Does that make sense?
Yeah. Chris, let me come to you. When you look at the BNPL trends in other regions, like globally, and then when you compare it to what you're seeing at Grab, are there any key differentiators? And also one more thing is, like, when you look at some of your peers, like the global ride-hailing and food delivery companies, and again look at Grab, does your fintech arm and the likes of, you know, offerings like BNPL make Grab a differentiated company compared to some of your competitor, like peers in China and the US?
Yeah, I think in terms of, you know, what's kind of different that we see in the trends in Southeast Asia, I think it all goes back to the macro situation. So again, you know, 6 out of 10, or you mentioned 73%, 9 out of 10 uncarded, right? And yet it's gaining some traction for now, but still very new. So we've seen benefits from both the merchant side, increased basket sizes, better conversion rates. Consumers, they like it, better flexibility, control, cash flow management. But the differences we see are a couple of areas. One, I think, Angus, you touched on an important point. I think national data and credit scoring does exist to a certain extent. Of course, it varies again by country, but it's not as prevalent as other countries, right? Again, because of the credit card portion, right? So we see there is some difference in terms of data availability there. The second point, which we are really interested in, is BNPL. We feel for Southeast Asia has more of a financial inclusion angle as well. So what we see, for example, right, you know, I think like QR codes is a great example. Like Southeast Asia, you know, I think 8 years ago, no one thought QR codes would be where it is today, even in Singapore, surprisingly. But today, QR codes pretty standard, right? So for the average consumer in developing Southeast Asia, you know, cards are like, you know, not there. They just use QR codes for everything, right? So the same thing, you know, for the consumer who does not have a credit card, 9 out of 10, their first exposure to an installments product, a digital installments product, is BNPL. And we think, therefore, that there is a potential to leapfrog, just like QR code, you know, 8 years ago. So BNPL has the potential to leapfrog in terms of the digital installments product for developing Southeast Asia. And the third point, of course, then is, of course, Southeast Asia is really nascent in terms of just the players. We do expect more players over time and some consolidation. And I think the fourth point is the tech ecosystem in Southeast Asia, Joji, as you're pointing out, is quite different. In Southeast Asia, super apps are there, right? In fact, the term super app, you know, really came from Asia. So you've got super apps in Southeast Asia, and therefore the competitive dynamics and evolution will be different as well. So how we think about it is, you know, the first point, how we think about ourselves and how we differentiate versus our competitors is the first important part really is about data. So thankfully, you know, we've got a high amount of high quality, high frequency transactional data from transport, from food deliveries, from even rewards, and we're using all of that data ingested into our risk assessment system. And therefore we can develop, therefore the approach we take is a whitelisted one. So we don't rely whether you have a credit card or not, which is what some other players are doing. We just say, we just look at your we assess you based on, you know, primarily your transactions with us plus a host of other data, and we say yes or no, and we say how much, right? So it's completely personalized and a whitelisted approach. And I think this will enable us to scale to the rest of Southeast Asia once we bump up against the 9 out of 10 with no credit cards. The second thing, of course, is just the scale of our operations, right? So very few players have the licenses like GFG has across all the major markets across Southeast Asia. I think the third thing that we see, which is really useful versus other players, is that for Grab, you know, GFG is really not just, you know, a means to just accept payments within transport and food. It is a separate, it's a totally dedicated business unit within Grab. So for us to, for example, the cross-sell and leverage our ecosystem is really easy. So I think that's what we are really excited about. It's just really leveraging all these strengths to really grow in terms of BNPL.
Thanks, Chris. I'll come back to some of the points that you mentioned, but just one quick question. Earlier, you said that Southeast Asia is not like a homogeneous market. A solution that works in Singapore will not work in Indonesia or the Philippines. So how do you see it? Is it building different solutions, partnerships, and offering for each country in the region?
I think that there are two angles to it. I mean, from the tech perspective, of course, you need a horizontal platform so they can scale out your solutions across each market faster. The advantage of having a horizontal platform, of course, is that the marginal cost and the time to roll out the existing product in new markets is much lower. So we need to think about which parts we centralize and build as a horizontal platform. But in terms of then customizing and operating, executing, I think that's where, for example, Grab is very used to going very deep in each country, right? So we have said before, you know, we are 110% hyper local, right? So what does that mean for us? It means deeply embedded and local operating teams and localized partners as well, right? So for example, you know, we've got, I think, more than 60 partners, FI partners, and each partner, we think about each partner quite deeply in each country. So for example, in Malaysia, we partner with Maybank, and that benefits us because it improves our cost of funds, and we leverage our strengths side by side. Whereas in Thailand, we partner with Krungsri, our MUFG partner, right? So financial institution partners are localized, but also then how we operate and distribute. So therefore we partner with global channel partners like Stripe Guardian, but also local channel partners like Asia Pay to C2P, Razor Merchant Services, and so on and so forth. So it's a very, very hyper local and deep approach that we take.
Got it. Dheeraj, let me come to you, and you can share both the Southeast Asia and India perspective. From what you said earlier, just want to add on to that and just ask you, the BNPL market in India is on fire. Like almost every fintech there has got into that space. And even after so many years, if you look at the data, it has not really scaled much. So in that context, when you look at India and Southeast Asia, what are the similarities and differences between both markets?
So firstly, I mean, India has historically had a very unorganized credit society. I mean, that's something that has always existed, right? It's a very old economy and has had this underlying credit society that's been working. Now, what's happening is right now, a lot of factors, which is like merchant enablement and like Pine Labs does, we've enabled, you know, maybe 250,000 merchants who are enabled for BNPL, and we are now contributing to enabling about $2 billion out of the $3.5 billion of BNPL that happens in India, right? So it was an opportunity waiting to happen. I think there was a lack of infrastructure, lack of technology to pull the credit society from an unorganized to an organized sector. Another reason why India is now building up in the last, you know, maybe 18 months is also because the internet penetration has become now. I mean, I just heard Chris say 650 million people in Southeast Asia. India alone has an internet user population of 800 million, right? Which is supposed to grow to 110 or 120 billion dollars, if I remember the number right, by 2025, right? So that itself will give a huge impetus to the BNPL in India. I think it's at a takeoff stage, and what I see the numbers is supposed to go to $40 billion by 2025, and it's probably right now about 3.5 billion, right? Now, if you compare this to the global scenario, I think globally, if I remember again, it's about 100 billion is total BNPL market out of the, and it's supposed to grow to 700 billion. So India, from that perspective, is not so small in terms of the present, and what it looks like by 2025 is probably going to gain market share or global share. Now, if I cut down to Southeast Asia, and again taking a cue from what Chris said, every country is different, and it's like a heterogeneous mass of countries. Singapore is doing extremely well because Singapore, out of the probably about an addressable market of about 900 million. Again, reading the numbers again, we already did about 112, 114 million dollars of BNPL last year, which shows that we've actually penetrated 15% of the addressable market in Singapore. And that's all thanks to the fact that the technology adoption rates, the smartphone penetration, the tech savviness of the consumer, the merchant savviness or tech savviness, all these factors have contributed to this, right? We as Pine Labs, we will be replicating the India story into Southeast Asia very soon from a network enabling perspective, and we are soon going to use our technology that we've used in India to kind of accelerate the BNPL opportunity in Southeast Asia. And countries like Indonesia, Cambodia, etc., in Southeast Asia, again, they are now growing at a very fast pace because of the headroom of growth. So it's interesting how each country is actually evolving at a different pace, but the tailwinds that is causing this evolution to happen are pretty much the same.
Got it. Dheeraj, a few months ago, Pine Labs, you also acquired Fave in Southeast Asia, and you're bringing your BNPL offerings to Singapore and Malaysia through Fave, and there have been media reports that you will take it to other markets like Vietnam and Philippines. In that context, just wanted to ask, how does a BNPL player stand out as a product and differentiate it from another that's serving it just as a feature?
See, as I see it, there are three types of BNPL players in the market today, right? One is the standalone players, which are the Hulas or the Affirms or the Klarnas, right? They are standalone. They basically work completely transactional, merchant-based. Customer comes, wants a BNPL, and that's it, right? Then is the super apps, as Chris called it. They're not super, but basically a larger part of a larger offering. It's Fave, Grab, right? So that's you're not relying on one revenue line, which is BNPL, and hence you have the ability to provide the customer much larger experience in terms of his payment journey, in terms of his overall usage of the app. And the third one, which is very interesting, is while all this was happening, the banks were getting disintermediated completely, right? And now what's happening is, and again, we are enabling some of the banks to come back into this the BNPL game, as I call it. And this will be quite different because this is going to cause seamless experience to the customer, no registration required. You walk into a store and walk out with the product. The number of tenors are higher. The experience is far seamless. Of course, it doesn't address only the unbanked segment, but it will address the debit card segment, credit card segment, which is itself is a large opportunity. So those are the three, what should I call it? Typical BNPL players in the market, right? Now, obviously, the first one that I mentioned, which is the standalone, is most vulnerable to commercial disruption. And that's where I'm just putting together the fact that the most disruption is going to happen there. And if you look at the Klarnas, Affirms, Afterpay, all of them are valued like maybe 50 times more than a traditional bank, but they are still in the red, right? So that's something we have to look at. And if you overlay the customer segments which are using each kind of these three kinds of players that I mentioned, it's probably the Gen Z, which is the new to credit market, which is using the standalone guys. It's more of the more of the millennials who are using the super apps because they're more tech savvy, and it's probably the the Gen X who's using the bank related products. So to answer your question, to differentiate, I think there's enough room in the market to differentiate yourself, depending on which customer segment you have to go after, because the headroom of growth is really large and the size of the pie is huge.
Got it. Angus, let me sort of slightly shifting gears, especially in a market like Indonesia that you track closely. We are seeing established lending startups, all of them, most of them pivoting to BNPL to sort of attract both investor attention and to get better valuations. Most of these companies are shedding their, the P2P tag to grow their business. How do you see these fintech companies shaping up and becoming serious competitors in the BNPL space?
Yeah, I mean that's a very interesting subject, because what's happening is that these what were P2P lenders, say Akulaku and Credivo, they're effectively diversifying their portfolio of financial products that they can offer. And that means that that's probably happening at sort of both ends of the spectrum. So they're going from P2P lending into BNPL, because it's a very high growth, very interesting new area of growth. P2P lending is being slightly disintermediated by the digital banks, which have been started. But at the same time, the digital banks are also looking for opportunities to build their own loan portfolios. Rather than going out and spending lots of money acquiring new customers, they're going out and providing funding for the P2P lenders, and also providing funding for the BNPL. So that whole new digital ecosystem is growing. And I think these standalone players will look to grow into different areas, and they already are. They're already looking at acquiring digital banks, or they already have a digital bank. In the case of Akulaku and Bank Neo Commerce. So there's a kind of digital bank, P2P lending linked with BNPL. The ecosystem is kind of spreading itself, and at the same time, you're seeing the mainstream banks, who you might think will be losing out, but in fact, I think you'll see more of the mainstream banks getting involved in BNPL, because the credit card markets are not easy. I mean, credit card lending is not growing particularly, but it's still growing, but it's not growing as fast as you think it might. And there are actually very few credit cards in somewhere like Indonesia. There are only, I think there are about 17 million cards in the whole market, which is a small number in itself. But actually, there are probably only 9 million holders of credit cards in Indonesia, which is a very low number given the population of 270 million. The limits and so on are quite low on credit cards. It's very difficult to get credit cards in Indonesia. Some of the banks used to require you to actually have a deposit in your bank account to mirror your credit card limit, which kind of make it a credit card in some ways. I mean, that's changed a bit. It's become easier. But it's not easy to get your first credit card. It's easier to get your second credit card. But if you're in the position you can get a second credit card, then you're kind of slightly beyond the financial inclusion market. So what BNPL does, and what these standalone players do, is that they enable the man on the street. They enable the consumer, and that's financial inclusion. So it's not necessarily saddling the consumer with additional debt, which might attract the attention of the regulator, but it's actually enabling individuals, and actually also potentially enabling SMEs, because you could use buy now pay later in the SME space as well as the pure consumption space, which I think is already happening. Does that give you enough background?
It does. And Chris, specifically for Grab, do you think that food delivery is an ideal target for PayLater given the high volumes? Or is it that the margins here are so narrow that there's not enough money to sort of offer the BNPL?
Yeah, our food business has been growing well during COVID. Actually, what we've seen for PayLater, which is Grab's BNPL product, is that we actually target not of course food delivery, but it's the e-commerce categories, namely 1, fashion, 2, beauty, 3, electronics, consumer electronics, and 4, home and living. And in general, what we've seen is that there's bigger traction in terms of these bigger ticket sizes, which kind of makes sense for installment product. And I think as Angus was saying just now, the MDRs or the how it's monetized is totally from the merchant side. And in general, what we've seen is that, of course, merchants are willing to pay a higher commission than a typical payment acceptance product. It's because of the additional value and sales and potentially new consumers and customers that BNPL players can give them. So we think that based on those rates, I think the margins should not be an issue.
Got it. Just a quick question again related to Grab. You already have a range of fintech services. Dheeraj had spoken about the 3 different kinds of BNPL providers, and from where you're sitting, do you see a company like Grab which offers this as an additional feature alongside digital payments method as the right step, rather than compared to companies that offer it as a standalone product?
Yeah, so the way we see it actually is again, like we see PayLater is basically as a complementary and additive payments product for us. And I think when we think about these rolling out new services, it's always good to be customer centric. So we see PayLater really as an important additional tool or product to sort of serve our merchants better. So with our merchants now today, when we talk with them, we say, what do you want to accept? Do you want acceptance products that pay now, pay at the end of the month, or pay in 3 months? Doesn't matter. We've got products for you. But it's not just that, right? I think as Dheeraj was talking about that, merchants just have so many pain points in Southeast Asia. A lot of things and infrastructure is broken. So, for example, during COVID, what we saw was a lot of the sort of micro plus merchants, right, who never thought about going online. They just suddenly like, I need to go online just to survive. So for GrabPay, for example, we onboarded 3 times more merchants in second quarter this year versus last year, right? And a lot of them have been ask about how do we help them go online faster. So that's one of the reasons, for example, we keep increasing the suite of merchant products that we offer, merchant solutions. One example is Grab Merchant Commerce, which is a very simple e-commerce website builder for them, really catered for the small merchants. But more importantly, of course, merchants keep saying, help me improve my sales, right? So ultimately, it's all about that for merchants. How do we, as players in the market, help merchants increase their sales so that when they do better, we do better, and everyone wins in terms of just the overall ecosystem. So how do we connect these merchants better with the 25 million monthly transacting users in the ecosystem? So that's why, for example, we rolled out another product, which is basically a shopping feature to connect especially the small and micro merchants directly to our consumer base. And of course, for the consumers, it is an additional product for them as well. We have seen, for example, that some consumers prefer to pay now, but actually a lot of the consumers who are now using our PayLater product were our original Pay Now users, right? So it's very easy to cross-sell them. And therefore, that sort of helped kickstart our flywheel. Ultimately, again, the market, as Dheeraj was saying, is just so nascent. So we see plenty of opportunity in terms of the BNPL space.
Got it. Dheeraj, just adding on to what Chris said, especially on the merchant side, most of the merchants in Southeast Asia and India operate on thin margins. So will that lead to BNPL being concentrated on the top few 100,000 merchants or a couple of tens of thousands of outlets across both these geographies?
Great question, because there is this underlying assumption that BNPL only relates to 0%, right? So I think BNPL, as it's buy now, pay later, doesn't talk about buy now, pay later, no interest, right? It doesn't say that. So interestingly, there is this whole market where the consumer is willing to take up the interest cost. Just the fact that you can split his purchase into X number of installments is a good enough proposition for the consumer. Now, if that's the proposition for the consumer-led BNPL, there is no economic scalability issue because the merchant anyway is not funding it, right? It's a technology or a capability issue, right? So that's one part of the market. May not be very large, but in the last research that we did, there were about 7 out of 10 people, or sorry, 6 out of 10 people are willing to pick up a higher purchase value if they are even willing to, and even if they charge a little fee, right? It's all about the affordability curve, as I call it, right? Now, coming to the other piece, which is the merchant funded piece, right? The merchant margins are thin is a direct correlation with the cost of funds that the merchant has to pick up, right? And you're absolutely right. I mean, the lower the cost of funds, the easier it is to actually get the merchant enabled for for BNPL. Now, typically in the market, like let's take a Singapore, right? The typical MDR of a merchant in the range is around, without a BNPL, is in the range of 2 to 3%, right? You add on a BNPL for, let's say, a 12-month BNPL, it goes to 4 to 5%, let's say. Now, that kind of restricts merchants who cannot afford that margin to get into BNPL. Now, I'm going to relate to my earlier point. As soon as we have, lenders with lower cost of funds coming in, there's going to be far more merchants accepting BNPL at margins which are affordable, at MDRs which are lower. So, and that is why, again, we'll put stress on the standalone guys, because their only revenue line is from the merchant margin, right? So that's what's happening. So to answer your question, it's not about merchant margins. It's about the lender's cost of funds and how that margin will keep getting compressed. Ultimately, what's going to happen is the long tail merchants will still get BNPL. It'll only be served by lenders who have lower cost of funds and can pick up merchants at lower subsidy or subvention, whatever you call it, right? So that's how it's going. I do not see restriction on the number of merchants. I see the economic dynamics of the market changing from a lender's perspective, and BNPL juggernaut is not going to stop. It's going to go to the long tail.
Got it. Just one more point, Dheeraj. BNPL also thrives on high margin, discretionary products. So Affirm grew its business on PayLater. So what's the equivalent for this in Southeast Asia and India? Is it mobile phones? Is it gadgets?
Surprisingly, we are seeing a lot of white spaces which are getting picked up by BNPL. To name a few, we've got people picking up tires on installment. Beauty salons is, like Chris also said, it's a big segment. Cosmetic surgery, insurance, right? So that's the kind of white spaces where BNPL is entering, right? So I think it's not about the electronics or the gadgets or the product category. It's about how you can actually offer the solution to the customer. So like I said, it's cutting across. I mean, you walk into a Uniqlo now, people are picking up BNPL for on a $40 purchase at $10 a month, right? So it's no longer the size of the purchase. It's the convenience and the customer experience. But it's giving a 20% plus lift to merchants. It's giving a 20% lift in ticket size. Customers are willing to take it. So I think everything's working fine.
Yeah. Angus, let me just quickly to sum up this part of the discussion. Do you see standalone BNPL players in Southeast Asia surviving?
I think the ones that will survive, and I think the point that Dheeraj made is a very, very salient one. I think the ones which will survive are the ones that can offer a number of different products and may have the backing or may own a digital banking operation or have a very a straightforward source to funding, because it's less easy for them if they're standalone to generate the funding at a low enough cost. I mean, if you think about it, in Indonesia, if you're even a multi-finance company, which is not exactly the same type of business, but the minimum funding for those guys and the most efficient of them, with the best credit risk record, etc., is about 8.5%. If you think, that's quite a high, relatively high level of high funding cost. And you look at the banks, the funding cost of the banks is now ultra low in Indonesia. I mean, it's less than 2%, for a lot of the banks. So if the banks do decide to come into this space, they have an inherent advantage versus a standalone player who have to seek out more expensive sources of funding, which makes it more difficult for him to grow his client base into a wider range of categories.
Got it. Chris, just related to that in terms of my question to you is, am I right in saying that for a player like Grab, you can best utilize BNPL and other fintech solutions when you sort of integrate it because you're trying to be a full-fledged financial institution?
Yeah, so I think the ability to cross-sell is very important, and that's, I think, one of the key strengths, right? So for example, whether it's BNPL, any of our financial products, we always think about how we lower the barriers of entry in terms of making it more accessible and more affordable. And being embedded as part of Grab's ecosystem certainly helps. So for example, for when we rolled out insurance product, micro insurance product, from 2019 to 2021, I think we sold more than 130 million insurance policies just over those 2 years. So that's the strength of being embedded as part of Grab's ecosystem. But the benefit of that, again, I think the more important point is just going back to the data, right? So ultimately, the ability to, whether it's extending BNPL to more consumers across Southeast Asia, or even to merchants, or to cross-sell and develop new financial products, right? I think that's all about the quality of data that each player is able to gather, and the proprietary transactional data. So I think ultimately, the players who are able to accumulate the largest set of proprietary data and have again, proprietary credit risk management system, just like what GFG does, so that the risk scoring will, of course, improve over time from the funnel end to end. I think that's what is really most important for players to ultimately leverage this data to deploy it to and offer new financial products, whether it's BNPL or other sort of FS services.
Sure. Dheeraj, on the proprietary data that Chris was talking about, one advantage that companies, all BNPL players, let's say Pine Labs, Grab, all of you have over banks is that, the data that you have is more granular, and it sort of helps you build detailed composite picture of customers' credit worthiness. So is this credit score the key to building out a successful BNPL product? Because you can use that to provide tailor-made financial services once you have the credit history of the consumer.
Sure, and absolutely, and I think enough has been spoken about data, but data is the new gold, right? And embedded credit is the obvious extension of the use of data, right? It's supposed to go up to $150 billion by 2025, just embedded credit, right? And things like and financial scoring, behavioral algorithms, all that is going to give the rise to this, right? But based, as I see it, based on data, the ability to create customized plans, be it tenor, be it product, be it affordability curve, whatever, we can actually create those for each customer on a different parameter based on such data. And it's been used now. And for example, Pine Labs, we are doing merchant lending in India based on data and seeing how much the merchant is selling, right? We haven't gone on the customer side because that's not where we play, but yeah, POS lending, Amazon did an EMI program, Klarna is doing POS lending. So those are trends that will soon come up, which will ultimately make the customer journey so much more seamless. You just walk into a space and come out with a credit line and a product.
Okay. Angus, in one of your recent reports, you pointed out that the new digital banks and fintech arms of unicorns in Southeast Asia, while they may seem small and not really pose a threat to established lenders, these companies do have a huge advantage because they have the ecosystem support. They've raised really large funding rounds. So in that context, how do you see the consumer lending space in Southeast Asia change over the next couple of years?
Yeah, I mean, I think some of these newer digital banks, especially the ones attached to big unicorns and some of the larger players in the digital economy, I think they will do well. But it very much depends on the individual. I mean, there are lots of digital banks being set up. Some of them have a use case for targeting, say, subscribers of a pay TV channel, or there's one set up by Line, for example. I'm not sure whether they have the capacity to get their claws into the consumer as easily, as a big e-commerce player or a ride-hailing company might do. So, I mean, obviously, Bank Jago is attached to Gojek and Tokopedia. There's a huge number of merchants. There are drivers, there are sellers, etc., that can all be targeted as potential customers. So, and you can obviously market through those platforms to consumers as well. So, I mean, I think they have the financial wherewithal to be able to fund that growth. And it is very much sort of targeting consumers and small and micro enterprises. So, there's a target market, but, don't forget the big banks are also, competing in the same space. I wouldn't necessarily say that the big banks are gonna lose out as much as I would say that the small banks will probably lose out. Sort of small and medium-sized banks will not be able to compete and will probably lose customers. I think that the new digital banks will be very kind of, tech-driven. So the products they can offer are going to be, very forward-looking and very efficient, very appealing to the younger generation. And remember, you've got a very big young population, somewhere like Indonesia or the Philippines or and some of the other Southeast Asian nations. So, targeting that Gen Z, millennial type customer is very important. So, but some of the bigger banks are doing that very thing. Bank BCA has launched Blue, for example. BRI has launched its Agro Bank, turning that into a digital bank. BNI is also going to spin off and set up its own digital bank. So, and these banks will be not necessarily targeting the consumer as much as possibly targeting also the small, more small seller or small merchant in the market. So I think some of them will succeed, and I think the landscape will change. But I think that will be to the detriment of the small and mid-sized banks, which are often being acquired anyway for the banking license to be turned into a digital bank, rather than the bigger players who I think are also getting involved in their own way and actually benefiting to a large extent from this. I think these digital banks will also be able to provide funding for the likes of P2P lending and obviously for the likes of buy now pay later. And as also mentioned, I think that it's not necessarily a zero interest rate type of arrangement under buy now pay later, and it can be turned into what you might call a virtual credit card or a virtual credit number. So you'll buy one product on one platform, and you can use your number to buy products on other platforms within your limit, and there'll still be a buy now pay later arrangement, but you might have to pay a fee for that. So that's already existing. So it's not all. I'd say it's not all. You're right, absolutely not all zero interest. But at the moment, a lot of that, the costs are being taken by the retailer, and the retailers are really seeing the benefit of buy now pay later in growing their own sales. I mean, I follow Mitra Adipakasa, which is the biggest sort of retailer in Indonesia with 150 brands. They're seeing a huge boost to sales, online sales through their collaboration with Atome, which is a Singapore-based buy now pay later player. They're seeing big growth being driven by that association. And if you walk into an offline store, for example, I walked into the Birkenstock store in an Indonesian mall last weekend, and there at the counter was a QR code with Atome. You could buy now pay later on a pair of sandals. So I mean, it's really happening everywhere. You can see it, in front of your eyes.
Sure. We've almost run out of time, but I would request attendees to stay on for 5 more minutes so that we can take a couple of audience questions quickly to both Grab and Pine Labs. One audience question that we have is if you can share your the default rate on payments for BNPL. What's the rough average like in Southeast Asia?
I can start. Basically, all I can say is that, again, I think we are very comfortable with default rates. We sort of monitor and tweak that constantly. And we sort of, again, because of the way we think about it, we do a whitelisted approach using our credit risk engines. So we sort of throttle that up and down depending on what our approach is for each of the countries and markets. So basically, we are very comfortable with the default rates right now.
Dheeraj?
Yeah, so for Pine Labs in India, when I said we do $2 billion of BNPL, we are enablers of BNPL. So actually, the credit risk is coming from the banks. So these are existing credit lines that have been converted to BNPL using our technology, right? So we are really not taking a credit risk. So the question of NPA doesn't arise. In the Fave environment, like Chris also mentioned, we are fairly comfortable. I think the well under control, and always the opportunity to tweak around is very high because you're actually very, very dynamically managing those risks.
Dheeraj, another question from our audience for you. What's your criteria in selecting financial partners, both credit card and non-credit card players?
So we are does that mean banks? Basically, we're looking at banks who are acquirers or issuers, and that's how we would like to call it, because any bank who's into issuing and acquiring can get onto our platform and technologically enable themselves to offer BNPL.
Okay. Angus, the low Fed rates, probably contributed to attractive interest rates offered by BNPL players. And going forward, how will things evolve once interest rates start going up?
I think that really depends on the ability of the BNP player, where it gets its funding from. To be honest, so that's kind of different. And obviously, different markets have different dynamics relative to Fed rates. I mean, Indonesia, for example, has kind of historically low rates, but they're relatively high relative to the rest of the world. But so I think there's still a lot of latitude in Indonesia for growth in BNPL, and I think the rates would have to go up quite a lot to halt the growth in this space.
Yeah, this is just one question to all the panelists, in the sense, what do you think is the regulatory, the outlook for Southeast Asia against the backdrop of what's happening in China? If anybody wants to take this.
I can start. I mean, I think my assessment is that overall, and it's quite timely, right? Because we've got a Fintech festival this week. Overall, the regulators are actually pretty progressive in terms of Southeast Asia. For example, you've seen their initiatives in terms of real-time payments. You've seen initiatives of local rails, taking the lessons from India's UPI, of course, in terms of interoperability, not just on domestic basis for QR codes, but also now cross-border. And all this is great, of course, for the payments industry, because it just lowers the cost of transactions. It reduces friction for every player in the ecosystem. And that's great for payments and cashless adoption. I think then if we take that lens for BNPL, which is today's topic, I think there's some questions around there as well. So therefore, the ability for all the actors in the fintech players today and tomorrow who are emerging is very important to sort of make sure that they act in a responsible and trusted way. Because again, 9 out of 10 citizens in Southeast Asia don't have a credit card. A lot of them, maybe this hopefully will be their first exposure to an installments product, and you want a good and trusted experience for them, right? So for example, I think all the players need to have a very proactive way to sort of work with regulators to sort of manage national agendas, protection, consumer protection, but also to promote innovation in the marketplace, and on their own have very specific policies. So for example, like us, we are very careful about who you offer these installment products to. They're all individualized and tailored to. We use our tech to sort of ping them about in terms of when their payments are due. We stop their transactions the moment they miss a payment. And then we, of course, then work with regulators and national organizations to educate about using BNPL for the very first time. So I think the most important thing is for all the players to act together, especially for BNPL, to sort of maintain that trust level so that this part of the ecosystem can really grow.
Dheeraj?
Yeah, so I think for any business or any segment that is running so fast in the northward direction as BNPL, obviously the regulators are rightly concerned about responsible lending, because this is growing at a pace which needs to be viewed, right? So, and I completely agree with Chris that all the players have to be acting not only for the larger good of the countries and the economies, but also as not throttling innovation. So it's a tightrope walk. It's a responsible behavior that all of the players need to play with. If not, then the regulators will kind of put guardrails around it, which will obviously stop the growth trajectory.
My final question to all the three panelists, just take 30 seconds each with your predictions for 2022.
Okay, I can go first. First of all, I think is and some part of it Chris alluded to, is cross-border real-time infrastructure. I mean, that's something that's going to become very important, and it's going to be the next frontier of internationalization of fintechs. So that's one. Second is competitors are going to become collaborators. I think that's an important one, because I don't think anybody has the time to develop everything that they think of. So it's best to kind of create synergies amongst like-minded companies and actually get the equation right. And the third one, I think, is blockchain will become mainstream. I think there'll be many more use cases on blockchain which will come up.
Chris?
Yeah, so for 2022, I'll just focus on BNPL again because we're so excited about it. I think the first word that comes to mind is just adoption. So we see continued adoption and leading to greater convenience and hopefully financial inclusion for the underserved Southeast Asian market. Of course, for the great millions of SMBs in Southeast Asia to really benefit and grow from that. So adoption is one thing, continued adoption. Second thing we do see though is starting to see some consolidation. We talk about marketing, and there will be more players. Promotions or offers or deals will continue to be prevalent in the market. So firms will need to think about ways to make the economics work and be more sustainable. So we see some consolidation in the market happening, which kind of leads to a third point, right, after consolidation. So very important to keep our eyes on value. How do we as BNPL players really demonstrate consistent and strong value to the merchants who are using this new service, right? So for example, today is 11/11. Everyone has increased sales, right? So it's easy to demonstrate that benefit, but can you demonstrate that benefit to the merchants, day in, day out when it's not 11/11? So it's not just being a payment method, but how do you demonstrate efficient value to your customers, which are the merchants? And that in the long term will be the players who will win.
Yeah. Angus?
I think you'll see a massive increase in the adoption by consumers of use of buy now, pay later as the number one point. I mean, in the US, the statistics are 60% of consumers in the US have used a buy now, pay later service. I think Australia, it's about 30%. I'm not sure what the use case is in Southeast Asia at the moment, but it's much lower than that. So I think there'll be increased adoption of it and increased availability of buy now, pay later. I think you will see some listings. And so there'll be a lot more scrutiny on the sector. There'll probably be a lot more data available. And I think there'll be a lot more growth, and there will be some new entrants into the market. I mean, I think companies like Zendit, for example, which is a payments processing, payments gateway company, that they're going to get involved in buy now, pay later. The banks, I'm sure we'll see more of the local banks, especially in Indonesia, getting involved in the space as well. And they have an inherent advantage given their very low, very low cost of funds, and also their ability to manage risk. So that would be my main points.
Yeah. Thank you, Angus. Thank you, Chris. Thank you, Dheeraj. Such an insightful session. We are already 7-8 minutes beyond 4 p.m. in Singapore. And thank you to all our attendees for joining us. I'm sorry we couldn't take all the audience questions. We'll send across some of the questions that we were unable to take to the panelists, get them answered, and when we carry the transcript and the video on our site, we'll try and ensure that the remaining questions are also answered. Just a quick reminder, our next webinar is on Monday, so I hope you all can join us. And like I said earlier, make sure you join us for our Jakarta Summit, which we're bringing back next year, March 8th and 9th. Thank you again. If you're in Southeast Asia, have a great evening, and see you all soon. Thank you.
Bye, everyone. Thank you very much.
Thank you. Thank you.
Thank you very much.